And savings, of course, are just a byproduct of your work, your efforts throughout life. And that's why the fiat currency system, central banking, and our current form of governments are so wrong because they do the opposite, right? They keep you indebted. They keep you skint. It's almost like slavery. Wednesday, October 8th, 2025, Monaco 64, home of alternative economics and contrarian views. You have to excuse me for my voice. I feel a lot better for my cold, but yeah, it's not coming out very smoothly. Today is an important day. I think the truth for reason. And what do I mean by that? Well, ever since around 2002, when I actually decided to diversify, my wife and I decided to diversify our investments into a little bit of gold. We bought some Krugerrands, 1 ounce gold Krugerrands at the time, very cheap compared to now. But it got me into a rabbit hole of history, monetary history, economic history, and still in 2002, the speech by Ben Bernanke, who at the time was a Fed governor, about the helicopter money, about the fact that the US had the technology that was basically costless, that they could just print dollars and that they could fight deflation. Deflation was always the worry, and a lot of people bought into that. But when I read that speech, and that was November 2002, and we bought some gold back in the summer of 2002, and I still remember the price, £222 and 25 pence. I'm in the UK. Right now we're trading above £3,000 per ounce. But anyway, that's not the point of what I'm talking about. What I'm talking about is when Bernanke made that speech, it raised red flags. It raised alarms in my head. Because the reason I bought Krugerrands was just to diversify. But that speech, it reminded me of all the other historical precedents of hyperinflation that I had read about. And if you want to find out about some really good books about those topics, I have a playlist about my book recommendations. I won't go through it right here because there's going to be a book here that I'm going to refer to you today. But yeah, that made me really, it raised alarms, and I knew we're going down that road. They were setting us up for that. Bernanke was not the chairman at the time, but I knew he was being groomed to succeed Alan Greenspan, and he did so a few years later. And I've warned many people, and some people have heeded that warning about hyperinflation. And what is hyperinflation? Well, it's the collapse of the value of the currency. And the problem is that many people out there haven't studied what the dollar is, what money is, what gold is. They don't understand that the present fiat dollar is a derivative of gold, and that the higher the price of gold goes, that means the more worthless the dollar is becoming. And I'm afraid right now what we're seeing, and today, of course, London time, gold broke through $4,000 for the first time ever. I think New York time or Eastern Standard Time, it was 10 p.m. On the 7th of October. So there is a time difference. It's a very significant day, at least for me. And why is that? Well, because a couple of years later, in '04, when I was already a staunch sound money proponent, or a gold bug, if you want to call it. I don't mind being called a gold bug. I was going to work, and I used to work in the city of London as a futures and options broker in the government bond market, not in gold and silver, even though we did trade a few gold and silver futures for some clients. But anyway, I was on the platform around 6 a.m. in the morning, waiting for my train. And I used to buy the EFT, and I used to turn to the editorial page. I don't know why, I just like turning to the editorial page first thing and read what they were covering. And this came up, and this was April 16th, 2004. You can see here that I wrote the date. And it says, going gold. The pointlessness of holding bullion continues to sink in. I'm not going to go through this. I'm going to put a copy here, and you can pause the video and read it yourself. But the gist of it was that the FT was saying gold is finished. The central banks have our backs. Inflation has been tamed. Yes, at the end they say, whatever the speed, the direction is clear. Gold is on its way out as an investment and a reserve asset. 3 cheers for that. I read that before I got on the train. And at first I was like kind of outraged and a bit angry. But then I realized this is rubbish. They haven't done their homework. And I even thought, this is like fake. So it was my first experience with fake news. So what I did when I got to work, and at the time I used to work for Men Financial, which later on became MF Global. They did an IPO. I went to the mailroom. I had cut the editorial off the paper, and I had it laminated so that I would always have this here. Of course, I can probably get an old copy of it, but I have this, and I wrote here the date, excuse me, and the price of gold, and it was $400 and 65 cents. And as I speak here, Wednesday, October 8th, 2025. So about 21 and a half years later, we are at $4,030. So 10 times higher. So how come the EFT got it so wrong? Well, because the EFT is an arm of the banking establishment, financial oligarchy establishment, and one thing they hate is the public to not be in their fiat currency system, in their debt-based system. They want you in there. They don't want you protecting your wealth, and that's why they do it. So what we have now really is going dollar. The pointlessness of holding dollar continues to sink in. That's what it's all about now. And why do I think gold and silver, for that matter, are now accelerating so much quicker, so much higher? Well, I told you about the Bernanke speech. I warned colleagues, family members, friends. Most of them didn't really want to listen to me or didn't take precautions. Some of them did. I had some very 2 or 3, friends that I can count on one hand at work, colleagues that, yeah, they saw this as well, and they became gold bugs, and I still talk to a few of them. They're really good friends. But even people who thought differently, who knew that QE was a disaster, because QE is basically money printing, and I did a little bit of research. So the major central banks of the world, from '08 until now, until the peak really, they printed 25 to 30 trillion dollars out of thin air. Yes, and the Fed did about a third of that. They went from 800 billion, their balance sheet, to almost 9 trillion, excuse me. Japan's still at it. And who knows, maybe the Fed will start printing again. And I started this channel, of course, 10 years ago. And I always used to get a lot of pushback from the deflationists, those who thought the dollar was going to end up being king, the milkshake crowd, or the people who said yes. Actually, I remember one person, and I'm not going to use names, saying QE is deflationary, right? My goodness. And so what I think gold and silver are doing now, they're revealing the true state of the dollar, and by dollar I mean the fiat currency, because technically, really, the dollar used to be a weight of silver and gold, right? And a lot of people don't know that, and that's the whole problem. I saw a hedge fund manager, Ken Griffin, one of the biggest hedge funds in the world. He said recently, it's really worrying that gold is going up, really worrying for the dollar. And I thought he must not understand what gold is and what the dollar is, because the dollar is not real money. The dollar is just the fiat currency dollar is just a derivative of gold. He didn't go as far back as 1933, when money was basically made illegal in the US. You couldn't hold money anymore, i.e. gold. You could silver, but not gold. And that's what a lot of people forget about. But I've recommended this book many times in the past, A Pocketbook of Gold, a survival manual for monetary mayhem. By Jim Sinclair and Peter Carlin. Unfortunately, Jim passed away a couple of years ago now, I think. But recently I was contacted by Peter. And I did an interview with him, a great interview last week, and I'm going to put it up here in the cards. And they only had one edition of this book back in 2010, 2011. I was fortunate enough to buy it at the time. And now if you want to get one of these, it costs an arm and a leg, or it costs an ounce of gold. So he's published it again on PDF. It's $25, which is quite reasonable, I would say. I'm going to put a link to it below in the description. Basically, the website where you can buy it is apocketbookofgold.com, but I'll put it down here anyway. But I always love to refer to this book because, it's been a great pocketbook, a great manual for me to know what was going to happen, because Jim Sinclair and Peter Carlin have a lot of experience, not just in the markets, but in history, finance, economics. So let's go first through what the book is about here. So chapter 1 is about why owning gold. Chapter 2 is what is gold. Chapter 3 is how to own gold. That's very important as well. Chapter 4, when should you own gold? Chapter 5, aphorisms of gold. Chapter 6, looking forward, right? But I'll just go through the first chapter or so, and then I'll go to one of my favorite parts on page 70. which I think will help you understand what's going on and why the RSI, the MACD, and all other technical indicators might become pointless going forward, at least for the price action in the long term for gold and silver. So, Chapter 1, Why Own Gold? And there's a quote here from Ludwig von Mises, who you need to look into as well, of the Austrian School of Economics. But anyway, von Mises says, there's no means of avoiding a final collapse of a boom brought about by credit expansion. Yep, $30 trillion, right? The alternative is only whether the crisis should come sooner as a result of a voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. Well, I think we're deep in that catastrophic moment for the system. The primary reason to own gold is that it maintains value, especially during times of political, economic, and currency-related crises or crisis. In short, it operates as insurance that includes, but is not limited to, insurance against political uncertainty and economic disorder, as well as insurance against the whims of central banks and their tendency towards money printing. So now let's go to the section where I think we find the reason why we're seeing what we're seeing now. And it's on page 70. And it says, gold is a revealer of falsely stated wealth. Remember that 25 to 30 trillion dollars of QE I mentioned to you? Well, that's falsely stated wealth that has also spewed over, if you want to call it, into the biggest financial bubble the world has ever seen, right? And we're still, the everything bubble is still there. I mean, the NASDAQ is at all-time highs, but so it's a massive bubble. It's not just that 30 trillion. You have to multiply that 30 trillion many times over because this system uses a lot of leverage. So when wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. I would add here that you can own real estate, farmland, without leverage. And I think that does maintain some of your wealth, even though it's not that liquid in a crisis. But anyway, let's continue. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does. But wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation, while That's what's happening right now in spades. Gold is telling us that, and silver. And many people, unfortunately, especially the middle class, are going to be left penniless. Yes, they'll have balances in their bank accounts, in their savings accounts, in their holding of government bonds, in their state pensions, but it will buy nothing. And that's why you really do need some gold and silver to protect you financially. And it's still not that late to do it, in my opinion. As the imprisoned money manager Martin Armstrong has artfully stated, well, he's out of prison now, of course, and I quote Martin Armstrong, "The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state," close quote. The corresponding rise in gold, especially when it is a global phenomenon, and it is now, of course, in effect, a devaluation of all the world's currencies and the restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. So yeah, I'm not trying to have a go just at the dollar here, the fiat dollar, all fiat currencies, which, by the way, are derivatives of the dollar. They're all going down. They're all going down in the ship together, so to speak. Falsely stated and assumed wealth, largely created out of the assumption of debts that can not be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devalue of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase, debt deflation has become currency inflation. They are one. So there you go. That's the way they are gonna make the debt more manageable. They're gonna basically inflate it away. And those holding the currency, which is the other side of the debt, are going to be left holding the bag unless they have a little bit of precious metals on the side. So, right now it's 8:04 a.m. London time, and we got gold at 4,031. The high's been 4,037. Silver yesterday had a tough time, but it's rebounding today. It's up 73 cents at 48.55. It's been as high as 48.96. I think it's only a matter of time until silver breaks through 50. Could be later on today. And before I wrap up, I'd like to thank all of you, all the followers of the channel, even if you just started following today or yesterday or 10 years ago. It's been a great journey. Of course, we're going to continue, but hopefully I've been of some help to some of you to protect yourselves financially. I think the most important thing about having gold and silver right now is not that we're going to be buying Lambos or Porsches and things like that, is that we have peace of mind. That's what it's all about. peace of mind, knowing that yes, you've protected your savings. And savings, of course, are just a byproduct of your work, your efforts throughout life. And that's why the fiat currency system, central banking, and our current form of governments are so wrong because they do the opposite, right? They keep you indebted. They keep you skint. It's almost like slavery. And hopefully this system will implode, and hopefully we'll see something better come out of it. And that's why I ask always, maybe not so much recently, but to share these videos so more people know about what's going on, because believe me, the vast majority of people out there are still clueless to what is going on. And even people who are supposedly university educated, who work in finance, some people don't understand what's going on right now. And that's worrying. But anyway, with that, I'm going to wish you all a very good day. Take care. Bye.